Viva Farms is a farm incubator program. We're trying to train the next generation of farmers. Insurance, essentially, like you guys, you all probably have insurance in your daily lives for all sorts of things. In a way, it's like, insurance in just general terms, it's like you are paying someone so that they are taking on some of the risk. So like driving your car around, right? Like that's very risky, and we have to buy insurance so that in the event that if we injure someone and you don't have enough money to to pay them back or to pay for their medical bills, that they get paid, right? So that's something that we've decided collectively that insurance is really important in that way. Health insurance is a big one. We haven't gone that route exactly, but we're moving in that direction. Hopefully that everyone has health insurance. So, lots of different kinds of insurance, particularly those that affect farm businesses. I'm going to talk for a few minutes about the different types, and then we'll talk all about crop insurance specifically. Really any business, should have a general liability insurance policy. And before I even talk about that, I also need to clarify that I am not an insurance salesperson or an insurance expert. So I would love to share your experiences. Who's familiar with general liability insurance? Yeah, someone talk about general liability insurance? What do you understand that to mean?
General liability, can be applied to multiple industries, but if you're producing something or if you're touching a client in some production way, your risk for liability, being somebody coming on to your premises in the manufacturing process or consumption per se, is then mitigated.
Sure. Okay. Yep. So liability in that sense would apply to your business as it relates to kind of the outside world. Yeah. I think that's a good sense, right? So yeah, operating our businesses in the marketplace, we are liable, as we kind of just talked about in our risk management session. We talked about all the different ways that we're touching people and all the different ways that we can kind of get into trouble. So general liability insurance essentially will insure against that. So that's something that's really important. Viva Farms has a general liability insurance, but people who operate their own businesses on Viva, you have your own independent entity. And so that's something that you need to kind of look at as far as what is your risk and exposure under the general course of your business operations. You know what I mean? That's something that we can kind of talk about and maybe in a different setting, but something that we should kind of think about as Viva farmers a little bit too. That would also sort of cover, if you have someone come on site and get injured, right? Or if someone falls on your premises, those sorts of things, right? Generally, insurance will cover you except through some kind of gross negligence, right? And I'm sure that if there ever is the circumstance where there's a lawsuit or something, people are going to try to prove that you were somehow grossly negligent. So just knowing kind of what the limits of your insurance are and shopping around a little bit, just as in general. Specific in farming, we talk about product liability insurance. Sort of general liability insurance is all of your activities. Product liability insurance relates specifically to the products you produce and put out in the marketplace. What we produce as farmers is sort of especially risky because people are ingesting what we produce, right? There's only so many industries where people are buying a product of a company and then eating it, there's a special circumstances that relate to that. In the marketplace, product liability insurance is really important, and something that customers will ask for. So for example, to sell on the Puget Sound Food Hub, you need to have product liability insurance. That's something that's sort of above and beyond your general policy. And a lot of customers that you work with on a regular basis will require that you list them as additionally insured. So they'll actually want like a certificate with their name on it that says that that you kind of, your policy extends to them, if that makes sense. So, you know, like when we sell on the Food Hub, or if we sell to any kind of institutions generally, you know, we sell to Whole Foods, we sell to Charlie's Produce, we sell to all these people, you know, we have to list them as additionally insured. Any kind of like farm to school programs a lot of times will require that, though those requirements are loosening a little bit because as far as schools are trying to kind of make it easier to buy locally, some of that's being relaxed, but it's still, anyways, so just, yeah, so product liability insurance, and generally those policies will cover like, you know, $1 million per occurrence is a pretty standard one. So, you know, like you can't sell to Whole Foods unless you have at least $1 million worth of coverage, which sounds like a lot of money, and it is a lot of money, but also knowing how the costs of things legally and medically and whatever it is, like $1 million goes pretty quick, I think, these days. I wouldn't know, but I think it can. Yeah, so product liability insurance. So just kind of when you're thinking about, you know, for your business and like insurance as a risk management tool, making sure that like you are really covered in all the activities you do. So like you're covered if your employee injures themselves, you know, like workers' comp coverage, that's like a whole other thing, but that's like in a way is a form of insurance that's kind of through the state. You know, making sure that someone eats your products and gets sick, that it doesn't ruin you, you know, both as a business and personally. And then, you know, and making sure that, you know, visitors, you know, your vehicles, whatever it is out in the world. So just thinking about that. And that's probably all I'll say about insurance generally. Now I'm going to start talking about crop insurance. And crop insurance are specific programs that that are from, you know, the federal government. And there's sort of an opportunity because in the 2014 Farm Bill, there's a lot of changes to availability in crop insurance. You know, I think a lot of people think about crop insurance as sort of only for big commodity producers, right? Like if you've, you know, you read about like big corn and soy producers and sort of those big commodities, like they've always had this crop insurance where if their yield or the price for that product is not what they were expecting, they get some form of compensation around that, but it's never really been available to small scale diversified farmers, and that actually has changed in the last several years. So we'll talk about a couple of those programs that exist. So yeah, you know, crop insurance, there's an opportunity right now for small scale producers to really have a safety net. You know, it's a lot of these products are not necessarily going to be useful for like the very first year beginning farmer. And in fact, to access a lot of these programs, you need to have, officially you need 5 years of Schedule Fs. And Schedule F, for those of you who don't know, is a special tax return that farms do. Schedule C, like if you own any business, a Schedule C is sort of the general tax form that you would, you know, that you would file under. Schedule F is like a Schedule C, but just for farmers, and all of the categories are broken into it. You know, like I said, practicum students will talk about taxes more in detail at a later date, and and anyone's welcome to come to that too. You know, officially you need 5 years of Schedule Fs, but there is an exemption for beginning farmers, and beginning farmers under the USDA classification is anyone who's been farming for 10 years or less. So anyone who's a beginning farmer, which I'm guessing is most people here, qualify where you only need 3 years of Schedule Fs. So there's a little bit of an in, you know, and like for those of you who maybe are just starting out, it's like, well, I don't have 3 years of Schedule Fs, but something to kind of think about, like as you start your business and as it begins to grow, like, you know, if you're starting a business at Viva, for example, like that's a really good way to like start to get that paperwork trail going over a number of seasons. And then once you get there, it's like you have a whole, number of tools available to you. So that's, as a little bit of a digression, it's really important as a farm business that you're filing the right tax information, because you want to be setting that paper trail so that you qualify for these things. So start right away doing a Schedule F. A lot of accountants and like tax professionals, they might not necessarily be familiar with a Schedule F. So like you want to make sure that you're working with someone that's familiar with that, and if they aren't familiar with that, that like you're telling them like, hey, like do that, make sure I'm doing a Schedule F. Don't just kind of take their word for it, because I know some people, if they're not specifically like farm accountants, they might not really know much about it. So just making sure that you are, making sure that you're doing that. Crop insurance basics. Essentially, well, I was going to do a little bit, just like a snippet of history, because I think it's interesting and important. That crop insurance really was started in the 30s in relation to the Dust Bowl, right? A lot of sort of pre-1930s, pre-Dust Bowl, there was sort of Wild West, and a lot of, because of these natural disasters that occurred, a lot of sort of government programs came into being to kind of help. Like in the late 30s, they formed the Federal Crop Insurance Corporation. That was a government program, and farmers worked directly with the government on that. And starting in the 80s, like a lot of things, it was increasingly privatized, right? So like the government still offers these programs, but you couldn't buy it directly from the government. You had to buy it from private insurance companies. And that sort of continued up to date. In 1996, the Risk Management Agency was formed, and that was, kind of a big step in sort of like broadening the federal government's capacity to sort of deal with these things. And, getting all the way up to the Farm Bill in 2014 is sort of like the next iteration of like these programs becoming more and more available to farmers where it's really accessible right now. So that being said, crop insurance basics. You don't buy crop insurance from the federal government, you buy it from private insurance agent. There are a number of agents in this area that can sell these particular programs that we'll talk about. I'm going to write them here, because getting up and moving. So one of them is the Whole Farm Revenue Protection. And essentially, we're going to talk quite a bit about this. There's also some paperwork here available. You guys can take like fact sheets. We're going to talk about Whole Farm Revenue Protection, and we're also going to talk about, I'm going to write the acronym for it because it's like but I'll tell you what it is. Essentially, it's non-insured crop disaster recovery program. And that is known by the acronym NAP. Non-insured crop disaster program. That's what it is. It's the NAP. Anyway, so we're going to talk about whole farm revenue protection first. So I'm going to erase this. Is that okay? And I'm going to write some numbers, and hopefully you guys can read them, and I'll talk about them as well. They were on my PowerPoint. They're like all right there. So whole farm revenue protection is available for farms up to $8.5 million of revenue, right? Who has over $8.5 million in revenue? No. Yeah, no one here, I don't think, though maybe someday. But anyway, so it's available for you. it insures against loss of revenue due to any unavoidable natural cause. This can be revenue that is like production revenue, and it can also protect against crops that you buy for resale, which is actually really interesting. Up to $8.5 million. Sorry, let me just start this so I can have some notes. It also can work with carryover loss from previous years, if that makes sense. I don't know like the exact mechanics of how it works, but I think if you have a loss in the previous year, if you are insured the following year, that you can kind of pay some of those losses forward into the next year and get payment on those, is my understanding. But I don't know the exact like mechanics of that, but I know that it exists. It protects, like I said, loss of farm revenue, so commodities that you produce and also commodities that you purchase for resale, not including forest products. So like it's just for like agricultural products, not forest products, which I guess forest products are under the USDA as well. So take that however you want. Essentially kind of the way it works is you need, so you've got, let's say 3 years of Schedule Fs, right? And you have your record of how your farm business has been doing. Kind of the first step is to determine like what your historical average is. So you would take like, let's say year 1, 2, and 3, and you made, $96,000, and you made $100,000, and then you made $104,000, something along those lines, right? Like average those together, it's $100,000 over 3 years, right? You establish what your historical average is. You then fill out paperwork and you kind of talk about what your expected average is. And if your expected average is more than what historic average is, you kind of have to be able to document why. Like you have to show investments in certain equipment or increased acreage or whatever it is, but essentially you can say like, hey, this year I'm going to do X amount better. And as long as you can document that within reason, they'll accept that. I talked about the average. You can also kind of create an index. So like saying like each year my sales go up 10%. That's like an allowable way to just like assume like, yes, like they will accept that as like my sales are going up 10%. For this coming year, we'll assume your sales would also have gone up 10%. But a lot of farms obviously are expanding, right? So like you want to make sure that have whatever documentation it is that you can do that. So between those two numbers, what you've done historically and what you're expecting, there will be determined an approved revenue. Who knows? I'm over it. So there'll be determined and approved, maybe it'll just kick in, that'd be awesome. Approved revenue. In the example, let's say, my historic average is $100,000 and I'm expanding and I'm going to make 120. They might take that and say, okay, yeah, sure, we're going to approve 120, but they might say, well, we don't quite believe you. We're going to do like 115, let's say, right? So that'll there's a process by which you're communicating with your crop insurance agent, right? So you're not communicating with the government around this. You're working through an intermediary, a private company. Once that gets determined, like what your approved revenue is, you then have to determine as the farmer what percentage of coverage that you want. The percentage of coverage is anywhere from 50% all the way up to 85%. they reward diversity. So if you only grow one crop, which I don't think anyone here really just grows one crop, you max out at 65% coverage. But if you have 3 or more crops, you can go up to 85% coverage. So I would say for everyone that I know here, you're eligible to get up to 85% coverage. Is there a question? Thought? No. So how much does it cost, right? That's really important. There is a service fee to do this. Excuse me, I was trying to make sure.
Service fee for a whole farm is $30.
Thank you. Joe
Yeah,
answered.
yeah, that's okay. And then, but what we do pay on the whole farm revenue
We'll edit that out, right?
is, yeah,
Yeah.
is depending if you have 3 or more crops, we will pay for almost 80% of that policy.
Yes.
The government subsidizes this very, very, very heavily. So,
Yes.
and Rob's doing a great job, but the government pays a lot of
Yeah.
the policy.
Yeah. So this policy, and I was about to get to like the subsidy.
Yeah. And if you're one commodity, it's only 56%. You only pay a little over 50% of the entire premium.
Yeah. Yeah. So essentially, like your percentage of coverage, like saying on any, saying it's $100,000 that you're approved for, right? And there's a flood or there's there's hail or whatever it is. Essentially, whatever you make that's less than that approved amount, you will get paid back up to the amount of coverage you have. So you would get paid back to get you back to $85,000 in the event of a failure.
Yes, but okay, 75% coverage level.
Yep.
So that means $100,000 you're going to be protected anything worth $75,000 or below.
Yeah.
So if you lose more than
Got
75%,
it.
you'll get a loss payment.
Yeah.
We will pay 80% subsidized on that, sometimes up to 85%. But if it's 80, you get an 80% coverage level, we'll only pay, it's a little bit less. Because that means the government's assuming more risk.
Sure.
So a 75% coverage level will pay more subsidy because it's a shared risk management. But 80% coverage level, I'm just taking this off the top of my head, I can't remember, it's like 70% subsidy.
Okay.
So it goes a little bit less because we're taking on more risk.
Yeah.
But either way, government is paying a lot of this, shared risk management.
Yeah. Yep.
Yeah, and the other one that you showed up there was NAP.
Yeah. We'll get to NAP. I'm sorry.
Yeah, that's okay.
So
I just wanted to make the correction. It's 30.
No, thank you. Yeah, thank you. That's great.
So that's how much the service fee is, how much is the policy?
$30 per crop.
No, $30 for the entire policy because you're getting a combined umbrella protection for that entire farm. Every crop that you grow on the farm.
Would you repeat that?
Yeah,
Dave?
every crop that you grow on the farm, the whole revenue protection program is an umbrella policy that protects all the revenue under that entire farm.
That's the whole farm.
Yeah.
Right.
And Rob's right. We will insure everything except for forestry and horses for sport.
Got it.
So no breeding of race horses or rodeo horses.
Yeah. So, Jolyn, there was a question because the actual cost, I know it varies by county, and it varies by at least from what I saw, it varies by county, it varies by crop.
Yeah,
Do you have like a range?
an AP, a yield policy has more rates by county. Like North Dakota gets hailed every year, so they're some of the highest rates in the nation.
Yep.
For whole, but when it comes to whole farm, because so many farmers here are diversified, your rates are gonna fall more because you're gonna be able to say asparagus, onions, strawberries, all these different crops, and you're gonna get to list those crops. We have policy holders for whole farm right here in the area.
Mm-hmm.
Some flower producers, some vegetable producers that have taken it. A lot of the blueberry and raspberry growers north of here have whole farm.
Sure.
And 90% of all the apples, pears, stone fruit, and grape producers in central Washington have whole farm.
just so you guys know, so like you do have to purchase this through an agent. I don't. Can you guys read this? This is the website where you can find agents that sell whole farm revenue protection. So this is www.rma.usda.gov/tools/agent. I did invite a crop insurance agency to come tonight, and they canceled. So sorry that happened, but
So she's with the RMA.
So Jolene's with the RMA. So she doesn't have that information because she doesn't sell the insurance, but at the same time, you gotta know.
So the process would be working with an agent
Yeah.
to get a policy,
Exactly.
and then
Bring my laptop.
the USDA
I just don't follow them.
subsidizes a percentage of it.
Exactly. Yep.
And so if you go with a lower percentage of your
And that's giving some-
determined revenue,
Yep.
then they'll subsidize a higher percentage
Yes.
of the premium.
Yes. Yep. I guess I would also just point, so the question was around like the USDA, essentially, you buy it from a private agent, but the USDA subsidizes the cost of it. And I think that, as Jolene said, they subsidize like up to 85% of it, so of the premium, which is, that's a huge subsidy. So sort of if it's something you're considering at all, it might make a lot, I think it does make a lot of sense, like dollars wise, because whatever it is, you're getting an 85% subsidy, and it could cover up to, a lot, up to $8.5 million. But obviously, you have to be having that kind of revenue to get there. But so relative to what the premium is, I mean, you'd have to kind of make a determination. But I think it'd be, So deadlines to apply for the 2018 crop year next year is March 15th. That also can vary by like crop and by county, but for Skagit County, it's March 15th.
All of Idaho, Oregon, Alaska, Washington is March 15th.
Okay. So we have time to research it, but that's that's the deadline.
Do you know if there's a downside or a risk to, well, I guess two questions. One, because it's a whole farm revenue protection, I know with like commodity-based crop insurance, you have to like hit certain targets in terms of like plant this crop by this date or something like that, or show that you irrigate or anything like that. Is there just, in general, you have to keep management records to show
Yes.
that you're taking care of the crop?
Yes. Yeah, you do. Yeah.
Is that like prescribed by crop, or is it kind of just they evaluate it on a case by case, claim by claim basis?
It's good farming practice.
Okay.
And is
Good
there?
farming practice.
Yeah.
Okay.
Yeah, and really the eyes and the ears, because we're USDA smallest agency.
Yeah.
We only have 400 employees nationwide.
Yeah.
So we're based out of Spokane, and there's 14 of us for Idaho, Oregon, Alaska, Washington. So the eyes and ears for us here is our sister agency, Farm Service Agency. You may work with them,
Yeah.
some, you may work with Extension, but really, it's just good farming practices. And you guys are the best stewards of the land. So we know that when we enter into a policy with you all, you guys are managing the land a lot better than,
Yeah, and I guess I would say like if you have historical records showing this, I mean, there's kind of maybe an assumed like, well, you must be doing something right.
Right.
Right, and he's right. There are policies like wheat, you have to have them planted by a certain date. There are, a lot of those crops you have to have planted by a certain date, but not under the whole farm.
Yeah. And then, do you know if there's any? I mean, obviously, like with an insurance policy, you don't want to have to file a claim, but if you're paying for something and you're filing a claim, like
There.
the rates are not determined by your farm. The rates are determined by the region that you're in and the type of insurance that you're taking. Like, if you make a claim 2 years in a row, does that increase your premiums for the following year?
No, it doesn't. And another thing I want to share about Whole Farm is, and again, I'm sorry I don't have my laptop.
It's a,
I left it at the hotel, so it's just, I got done, I was doing the minutes right before I left. And what I want everyone to share is No, it's there to protect that loss. And that's the whole reason the government got involved with crop insurance to begin with, back in the 30s, just like Rob said. But no matter who you go to, if you go to agent in Mount Vernon, you go to an agent in Linden, no matter, you go in Spokane, wherever you go to get at this crop insurance from any agent, it's gonna cost the same. So don't ever let an agent tell you that I can give it to you cheaper than Jim down the road. What's gonna be different is the service that they provide. One may provide you, a disc with, all your acres outlined on on a map, and some may do that, some may not, but it's the service that you're gonna get. But no matter what, that's a government policy, so it's not a competitive policy. So again, you're gonna get the same, it's gonna cost the same no matter who you go to at the same coverage level. And so filing a claim under this, the whole farm, your rates are not gonna go up. Now, if it was a wheat yield, then maybe, if you continue, like I was saying, North Dakota has a lot of hail. So their rates in North Dakota are higher than anywhere in the United States, as well as Texas, and their cotton, because there's disasters all the time. So yes, their rates will go up, but that's only on individual policies, like cotton, wheat, dry peas, bark, peanuts, or something.
Yeah. Yeah, so, I think we can, you guys signing up, when we get some more information, I can email it out to you. And then, but again, I think we have till March 18th, so like doing a little bit of research, maybe reaching out to some agents and trying to figure out what it's gonna cost, because it's a really good opportunity.
And I don't mean to interrupt you again.
Yeah.
But
Please.
Rob really gave some good examples a little bit ago, because we do take your average for the last 3 years, or the last 5 years, and then we also, if you tell your agent that, hey, I'm expanding, I got 10 more acres, and I'm gonna expand, we will give that expansion.
That's right.
Amount. So Rob, and in the example that I'm gonna send Rob and Michael, and that you guys, that they'll send on to you, you'll see them little calculations, so that you can take that into consideration,
Okay.
that your agent will do the same.
That's great. Yeah. So if you're like, hey, I was doing it on 3 acres, and now I bought
One.
and I've got this X amount more. Like they'll give you the benefit of the doubt. I guess that's the way you want to say it.
So where under whole farm that you will have to pay more is if your agent looks at the list of the commodities that you're growing, and we don't have it on the list, other crops is a higher rate. So, and I just don't think it's gonna apply to a lot of producers here. Now, where it applied to a flower producer here, right here in Mount Vernon, is we did not have flower foliage on the list. And we have cut flowers, we have flowers other, we have a lot of flower list of, but we don't do each crop, each flower. I will share that with you. But so that person did greens, so that man's per rate was less just going by that greens. And really greens is kind of lettuce, but they went by greens instead of flower other. So anytime you use an other and you're working with your agent, because we don't have that crop on that list, that's when the rate for whole farm will go up. And we added a lot of seeds. Seeds is huge in the Ephrata here. We grow a lot of seeds.
Yep.
We just added those in the last 2 years. Because prior to that, those producers had to pay a higher rate.
Okay.
If you're making a claim, is there a deductible that you pay along with the premium that you're already paying, or is that?
The deductible is the coverage level that you select. So in that $100,000 example, when you select the 75% coverage level, your deductible is at 25%. So you have to lose more than 75%.
Right.
Yeah.
Passing English and Spanish.
Thank you. Good
Yeah.
question.
Yeah, thanks.
So before we call it quits for the night, I did want to just talk about the NAP program, because that's also another really important tool for small scale producers. So the NAP program is administered by the FSA, the Farm Services Agency, and that you deal directly with the FSA on. So that one, like, you're not you're not getting an insurance policy from an agent prior. This is a program that's available. It provides financial assistance to producers of non-insurable crops when low yields, loss of inventory, or prevented planting occur due to natural disasters. It's a really great program for beginning farmers because, as I mentioned before, I'm not going to write it because you guys are all in the beginning farmer category, but the coverage of it is $250 per crop, up to $750 maximum per year in a single county. And this is sort of a base level program that will cover 50% of your production or a 55% drop in pricing difference, if that makes sense. So you would sign up for this program ahead of time, and then if there's a natural disaster, if there's a flood, if there's hail, if there's drought, any kind of losses that happen, the NAP program will help kind of get you back to 50% of what your revenue would have been. So it's not as good as the whole farm revenue protection program, but it's sort of a safety net there for farmers. The good thing is that, so I mentioned the $250 per crop, up to $750 max. If you're a beginning farmer, those service fees are waived. So essentially, there's not service fees for beginning farmers to do that. So you're eligible for that if you're a beginning farmer or if you have less than 50% of the median income level in the county that you live in. So if you're a socially disadvantaged farmer as well, or a limited resource farmer, you're also available to have the service fees waived on the NAP program. So as far as like the mechanics of how that works, you're registering the number of crops you have, you're paying your service fees or not, as it may be, if you qualify to have those exempted. And then you have kind of at least 50% of the production value insured against. So that's kind of like a real no-brainer because it's all you have to enroll in the program, but there's not, for most of us here, there's not really much of a cost. You can buy additional premiums to get you up to 65% of that cost. And again, I don't know what that cost is because that information is not available to me. But again, so the NAP program is really directly through the Farm Services Agency. So a couple different products here that you can think about in terms of your operation as it scales up. What makes more sense? The whole Farm Revenue Protection Program certainly. You have to kind of have this record of Schedule Fs, and you have to kind of have a little bit more of a track record and pay a little bit more, but you can really kind of get a more insurance coverage, whereas the NAP program is available for folks who maybe don't have as much of a track record, but you can prevent against natural disasters, and natural disasters can be a lot of production risks that you would, like flooding or drought or hail or wind or all of these sorts of things.
So there's no premium for the NAP?
It's exempt as a beginning farmer.
So the enrolling fee is the premium.
Yeah, well, so essentially there's no premium unless you have 50% coverage with no premium. But if you can elect to get up to 65% coverage and pay a small premium, but you have up to 50%.
So if
you just enroll,
and there's a crop failure because of natural disaster, they'll pay out 50% of your projected revenue.
They'll pay you to make up the difference to get you to 50% of your approved revenue.
For that crop.
Yeah, so saying your approved revenue is $100,000 and there's a big failure and you only make $20,000, they'll give you $30,000 to get you back to 50%.
That's per crop.
Yeah. Thank you. Yes.
Is weather the only natural disaster? I mean, for example, let's say there's a plague of insects or something, but how do you show that that's not a management thing versus a natural disaster? that whole gray area as far as what's natural and what's,
Yeah.
of course, they're talking about climate change, and is that natural, if it's human caused,
That's when you call your agent and you say, hey, I notice I have loss on the corner of my field. And then that agent will send out a loss adjuster and they will make that determination with you there. You will work with the loss adjuster. So and that generally happens on NAP as well. Another thing about NAP that I want to share with you, if you guys remember about 10 years ago, there was a lot of flood in the area. And NAP was very, very beneficial to the Hmong farmers who have a lot of bulbs and flowers, and they lost all their bulbs. And if they would have had NAP, they would have had replacement money to at least replace 50% of what they lost.
Sure.
But they didn't have it, and they lost all.
Yeah.
So they had a donation
So-
program.
I guess I'll just say that our time is up. I'll stick around, and Joe Lynn, I'm sure will stick around to answer individual questions if anyone has any. Thank you again so much for coming tonight. Thank you to the RMA for coming and for the financial support. Thank you WSU Extension. Thank you Skagit Media Marketing, and also. Please fill out an evaluation if you haven't already. Please make sure you sign up. It helps us kind of track what we're doing. And thank you again. We will see you soon.
Good job.
Good meeting you. Yeah. See you.
We're gonna bring in the humor, Rob.
Oh, jeez.